Something just broke in the silver market. I mean, one minute it was flying high, and the next it was in an absolute free fall. But what you probably saw on the headlines? That was only half the story. To really get what happened, you have to look past the breaking news alerts. You gotta pull back the curtain.
Okay, so first, let's just try to wrap our heads around the sheer scale of this. This wasn't some minor pullback. This was a 31% collapse in a single day. The worst day for silver since 1980. We're talking a once-in-a-generation event that completely vaporized months of gains in just a few hours.
So the big question is, what on earth could cause a move that violent? Was it some sudden global crisis, a massive new discovery of metal, or was there something else going on, something hidden deep inside the machinery of the market itself? That's the mystery we are about to unravel. To get to the real story, the first thing we've got to do is look past the easy answers. The ones that were all over the news cycle on that incredibly chaotic day.
The official narrative you probably heard went something like this. There was a key Fed nomination that shifted expectations for interest rates, the dollar got stronger, and hey, precious metals had a huge run, so they just hit an air pocket. It's a clean story. It sounds plausible, but it is so incomplete.
Because think about it, a macro headline might cause a dip, sure, but it doesn't usually cause the entire floor to just vanish from under the market. So you have to ask yourself, was that the real story? Or was that just the tiny spark that lit a much, much bigger fire? You see, the real story isn't on the front page of the news. It's hidden deep in the system's plumbing. This wasn't about headlines, it was about the mechanics, about leverage, and about a dangerous chain reaction that was just waiting for that first domino to fall. Okay, so to get this, you need to know a little about futures. Instead of buying actual silver bars, a ton of traders just buy futures contracts. It's basically a bet on the future price. But to make these big bets, they only have to put up a small deposit, and that's called margin. This brings us to a crucial concept, the margin call. If your bet goes south and the value falls, your broker calls you up and demands more cash, like right now. If you can't pay, they just force sell your position. And that's where the death spiral begins. Now take a look at this. Right at the moment of peak chaos, the main exchange, the CME, did something absolutely critical. They hiked the margin requirement for silver futures. Look at that jump, from 11% all the way up to 15%. This wasn't a polite suggestion. It was a rule change that mechanically forced thousands of traders to either come up with a lot more cash instantly or get sold out of their positions, which just added a tidal wave of selling to an already collapsing market. And this quote just captures the effect perfectly. As all this forced selling hit, the big players who are normally there to buy things up, they just disappeared. The gap between buyers and sellers became a chasm. So what should have been a staircase going down, well, it became a sheer cliff, an elevator shaft with a cable snap. But here's where the story gets truly fascinating. While all of this chaos was exploding on computer screens, in the world of paper contracts and digital promises, a completely different story was unfolding in the physical world, the world of actual, real silver bars. I mean, just look at this contrast. On one side, you have the paper market in full-blown panic. Prices are cratering, forced selling is everywhere, and liquidity is gone. But on the other side, in the physical world, demand was still incredibly strong. Inventories in the vaults were still being drawn down. Real metal was literally still leaving the building, even while the screen price was in a complete nosedive. And to understand why that disconnect is so important, you have to know this one key distinction. When you hear about total silver in the vaults, most of that is what's called eligible. That's basically just someone's private property being stored there. It is not for sale. The only portion that is actually available for delivery is the registered pile. And that registered pile was shrinking, which was a huge signal that the supply of real available metal was much, much tighter than anyone thought. So this massive disconnect between the paper price and physical reality, well, it isn't just some weird trivia fact. It's the entire foundation for the case for a rebound. Because while the paper market was having a total meltdown, the fundamental story for physical silver hadn't changed one bit. In that case, really it rests on 5 key pillars. First, a structural deficit. We are simply using more silver in industry than is being mined. Second, new friction on exports from big players like China. Third, real-world bottlenecks in just making the bars and coins. Fourth, the fact that all that forced selling that caused the crash is now probably over. And finally, silver's tendency to follow its big brother, gold, whenever it starts to run.
This quote here perfectly captures the most important point of all: the relentless industrial demand for silver, for solar panels, EVs, AI data centers. That didn't just stop because of a paper market crash. That demand creates a fundamental floor under the price. A market correction, no matter how violent, just can't erase a real-world supply and demand imbalance.
So after putting all of these pieces together, what's the real takeaway from this absolutely chaotic event? What should we be watching for now?
The bottom line is this: the crash wasn't a judgment on the actual value of silver. It was a technical, mechanical deleveraging event in the paper markets. It was a fire fueled by margin calls that smashed head-on into the brick wall of a physical market that was and still is incredibly tight. Which leaves us with one last provocative question. Was this event simply a crash, a violent end to a bull run? Or was it actually a reset, a brutal shakeout that washed away all the weak hands and, in the process, exposed the deep underlying strength of the physical market, setting the stage for whatever comes next? The answer to that question will depend on whether paper or reality wins out in the end.